Okay, welcome on stage our next company. Name is Equinox Gold. Welcome, the stage is yours.
Okay. Everybody hear me okay? Sounds like we got some thumbs up, or I see some thumbs up in the back of the room. Okay, excellent. Some of you may be familiar with Equinox Gold. We may be one of the larger companies here at this conference. As I've got on the screen here, Equinox Gold is we're in the process of delivering a top quartile large major gold producer. We're on a path to likely produce somewhere between 900 and 1 million ounces of gold next year in 2026. This year, our guidance is 785,000 ounces to 915,000 ounces of gold production. We're on track for that. The exciting piece about Equinox Gold is the company has been transitioning its portfolio and very aggressively acquiring assets in North America through the recent merger with a company called Calibre Mining. And so we're on a track to have majority of our gold production coming out of Canada. I will be making some forward-looking statements. I'm sure that you would be surprised if I didn't, so please do take the time to look at our presentation on our website, equinoxgold.com, and you can see all the details there. So, Equinox Gold, as I said, we're in the process of building a top quartile valued gold producer. I'll walk through some of the aspects of that, but from our perspective, what are those key attributes or metrics that we look at? Number one, you always need to have high quality, high margin assets in any gold price environment, which are obviously difficult to find, but that's a number one attribute. Number two, the assets should be located in a tier one mining jurisdiction. You can get top quartile value when they're in strong mining, favorable mining jurisdictions like Canada, in the United States, Australia are some of the top quartile or some of the top jurisdictions. And then I think probably one of the most important is your trust and confidence in a management team that can deliver on the expectations that are set in terms of the guidance and production and cost. And that's where, if we look over the last several years, there's areas for opportunity or improvement with Equinox. And through the merger with Calibre Mining, the company did announce a new chief executive officer. His name is Darren Hall. I've worked with Darren for probably 10 years. What Darren brings to this business, I think, will give us all levels of comfort and confidence in his ability to deliver on the expectations that he and the board set from a production, from a cost perspective. And the reason I say that is because Darren has worked in the mining business for probably 40 years now. But importantly, he spent about 30 years of his time optimizing, building, and operating major gold mines all around the world for Newmont. In fact, I would even go as far to say as I think he was very responsible for delivering a Newmont from the 80s through to the mid-2000s. So a very strong operator leading this business. And also importantly, Darren's a major shareholder of the business. Myself, Darren, a number of the board members, as well as our chairman, Ross Beatty, large shareholders of the business, and I think that's always important for investors to see the alignment with a management team and board that is also equally invested in share price performance and possibly returning capital to shareholders, aligning ourselves with those shareholders. So now we look at Equinox Gold. I've got a little pie chart here showing all the different assets we have in the portfolio, and you can see that almost 65% or 65% plus of our net asset value is coming out of North America, tier one friendly mining jurisdictions. So we are in the process of ramping up 2 new Canadian mines, which I'll talk a little bit about. Most recently, a mine in Newfoundland, Canada. So brand new construction. We've just had first gold from this mine, so it is starting to ramp up. And once it gets to what we call the nameplate capacity of that mine, it'll be producing about 200,000 ounces of gold a year. So we're right at the beginning of this mine's life. And then the second one that's been ramping up for approximately a little over a year now is a mine in northern Ontario, Canada, which is set this year to produce about 220 to 260,000 ounces. We're on track for very likely the lower end of that production profile, but nonetheless, the mine is ramping up, and we are seeing it's right at the beginning of its multi-decade life, and it should be approximately a 300,000 ounce a year gold producer. So you look at the two mines that we're building there, about 450 to 500,000 ounces of annual gold production coming out of Canada. I talked a little bit about some of those key attributes, and I bring up this slide because I'm sure a number of you are quite familiar with a few of these companies, Agnico Eagle, Alamos Gold. They're very well-known, established gold producers in the business. And I raise them because A, they've had excellent share price performance, but I raise them also because they have a lot of the key attributes that you look for when looking at a gold producer or a developer or an explorer. You know, I'll give you these examples are here on the slide, but Tier 1 mining jurisdiction and the percentage of NAV that are coming from Tier 1 jurisdictions. Substantial long life assets, free cash flow at, hopefully at a lot of different gold prices environments, but especially in today's gold price environment. One area for improvement for Equinox, as I've mentioned, is an operating track record. So the company, if we look over the last 5 years, hasn't always delivered on its production, hasn't always delivered on its cost profile. So I think that's an area of improvement for Equinox, and under Darren's leadership, I believe we'll be able to deliver upon that. Just checking my time here. Not a lot of time for these presentations, but nonetheless, bear with me. So when we look at all of these, I would say, key metrics, we do hit a lot of these metrics. And at the same time, we present, in my view, a very compelling value opportunity, trading at a lower enterprise value to ounce of production and a lower price to NAV. So I believe that presents a compelling re-rate opportunity as the company delivers on the expectations we've set, especially in Canada as we ramp up these Canadian mines. A couple of different key metric charts here for you to reiterate what I've just said in terms of the value opportunity, but on a price to NAV perspective. And these were all just very recently updated, maybe less than a week ago. So a price to NAV perspective, an enterprise value to ounce of production perspective, and then we can look at an EBITDA growth perspective. As I've mentioned a couple of times, we're ramping up these Canadian mines that will lead to production and cash flow growth. Here's an interesting chart to take a look at share price performances over the last few years. This was year to date, maybe a few weeks ago, or maybe even less than that, a week ago. You can see that the gold price has gone up over 100%, and typically you want to own gold producers or developers and hopefully exceed the gold price performance. Well, as you can see here, there's a couple of companies that haven't, and Equinox Gold falls into that category. So if we take 2022 through year to date about a week ago, we're up about 74%. Now you can see that all of our peers are up quite significantly above that. So I believe that this presents, again, reiterating the compelling re-rate opportunity. If this business, Equinox Gold, continues to deliver and meet the expectations and delever our balance sheet, I believe we'll be in a fantastic position to see continued re-rating of the company's equity. So Equinox Gold has quite a diversified portfolio. You can see here two major mines in Canada. I've just circled there in Newfoundland and in Northern Ontario. So ramping up those mines. We've got a few development stage assets and a producing asset in California. We've got some producing assets in Central America, Nicaragua. We've got another development stage asset, I'll call it, in Mexico, which is currently a heap leach mine that is on care and maintenance. And we're working through some social license aspects there to continue to unlock value there. This is probably the fourth largest gold deposit in the Americas. It's called Los Filos. So we're advancing that and working on different aspects within that mine to unlock more value. And then we've got 4 mines, actually probably now 5 mines and 4 mills in Brazil, producing about 200 to 250,000 ounces. So collectively this year, post the merger with Calibre Mining, we would anticipate approximately midpoint of about 850,000 ounces from this portfolio. But importantly, the company does not need to do any more mergers or acquisitions, so no more issuing of equity. We're very focused on per share metrics now and delivering this portfolio. We've got a great asset in California. This asset is called Castle Mountain, and we're currently going through what we call a Fast 41 process. And what is this process? It's interesting that most recently, probably a few months back, United States administration have announced a fast tracking of critical metals in the United States, and it was just approved by President Trump a few months back. Equinox Gold's Castle Mountain project. This is a multi-million ounce deposit in San Bernardino, California. And this asset would, upon production, would be producing about 200 to 250,000 ounces a year. We were the second project to be placed into this Fast 41 process. So it doesn't guarantee a positive record of decision, but it does give us comfort that there's a good probability that it will be a positive record of decision. And we would anticipate that a permit approval sometime in the second half of 2026. So we've got some embedded organic growth within the pipeline and portfolio. We've got less than 3 minutes left here, so I'm going to rush through the next few slides. We'll talk a little bit about our Greenstone mine. This is the one in Northern Ontario. The company is ramping up this asset. So we've in Q1, I'm going to go through some different metrics, and it might be a little technical, but in Q1 we were mining about 130,000 tons a day. The mine needs to be at about 200,000 tons a day of material movement. And interestingly enough, as we get into Q3 here, we're getting very close to that nameplate of material movement and throughput through our plant. So we're seeing some real good progress and advancement through getting this mine to nameplate. And we're quite optimistic about how things are going now, going into Q4. We would anticipate Q4 is probably likely going to be the strongest quarter of the year for the company on this asset. The second asset I'll talk about is the Valentine Gold Mine. I'm particularly excited about this asset. This is an asset that came from Calibre Mining, an asset that we acquired in 2024 when it was 50% through construction. The mine is now fully constructed. We had first gold come out of the plant about 3 weeks ago, and the ramp up of this asset is going very, very well. We would anticipate that this mine is at nameplate capacity sometime in Q1 or early Q2 of next year. And on an annual basis, we would expect it to produce somewhere, as I mentioned, about 180 to 200,000 ounces of gold a year. But very exciting for this asset is we've already made a new discovery on this property. About 1,000 meters away from the current open pit, we've discovered a new area and where we've drilled think about 172 meters of 2 grams per ton gold, which is a great intercept, a brand new discovery. This is what we would call a greenfields site. A greenfield site is somewhere where it's never had past production. It's never had any sort of underground or open pit mining on the property by small or industrial miners before. So this is very exciting. There's a very large, big faulting system that goes through the whole property that could demonstrate some very good upside for this asset. I will likely whip through the rest of the presentation because I'm out of time. So where does this lead us? This leads us to increasing production profile, potentially decreasing our all-in costs, and increasing operating cash flow over the next few years. So a very exciting time as we've enhanced the portfolio. We're realizing the potential and the opportunity here with these Canadian assets, demonstrating the growth that comes with that. And again, I've showed this already, but to recap, Equinox Gold, Tier 1 jurisdictions, I believe a very strong management team that will deliver on the expectations. And of course, with the current gold price environment, we've got excellent margins on these assets, and particularly now with the new long life Canadian assets, there's a tremendous opportunity here as we realize the potential of these assets as they hit the nameplate capacity that we've been talking about. And here we are trading at about $9,700 enterprise value to ounce of production, whereas the peer groups are trading quite a bit higher than where we are. So we've got a booth here. I'm out of time, but feel free to come by the booth and we can discuss more. Thanks very much.